Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is proper plant and equipment disposition, especially when we sell our proper plant and equipment. So let's go to our Excel file. We don't have a lot of lecture to do that. So let's consider here. At the beginning of year one, Scarpin Corporation purchased a new equipment as follows. Purchase price 450. Estimated residual or salvage value. Whoa. Come on. $80,000. Estimated service life or useful life 5 years, and we use a straight line depreciation method. So first of all, let's record our purchase and let's consider it was in cash. Debit equipment, purchase price, credit, cash. So here, our T account for equipment year one, 450. Scarpin Corporation decides not to hold the machine for the expected 5 years, but instead sells it on December 31st, 2023, 3 years later. So at the beginning of, instead of year one, let's make it more clear, beginning of 2021. Yes, now we have it. For 340. So, okay, if we keep these equipment for 3 years, we have three depreciation expense. So, year one, what is our formula? Purchase price less residual value divided by number of years, 5 years. So, 74 accumulated depreciation. Year two, we copy and paste the same numbers. Year three, we take the same numbers. Okay? What about our disposition? We are selling it. Wow, for instead of 340, it is 240. Okay, now we're good. Selling price 240. And how do we, first of all, we need to check if we have a gain or a loss. So, okay, let's do it. Our selling price is 240. How do we find the book value? The ending balance of equipment here for 50, uh, less accumulated depreciation, less this 222. So here, border here. So we have here less, the book value is negative 450 plus accumulated depreciation because it is negative. So our book value is 228. So our gain or loss, we sum these numbers here, and we have a gain of $12,000. So, okay, let's do our journal entry. First of all, cash, the selling price, 240. We need to close the equipment and we need to close accumulated depreciation, because if we are selling our equipment, we have no more equipment, we have no more balance on equipment account. If we don't have equipment, we don't have accumulated depreciation. So accumulated depreciation, we have a credit here. So to close it, we need a balance, and the balance is 222. 222. Now it is closed. We need to close equipment, debit here, so we need to credit. So our credit will be the ending balance of our equipment. And gain here, 12. Let's double check if we have good numbers here. 462, 462. If I don't want to have this math here, how do we find our gain or loss? The number to balance our journal entry here. Here, it is not balanced. We need a credit. So our credit will be the sum of debits less our credit here. It will also be the 12. So we have these two ways. Let's keep our most used way to do that. Hey guys, so quite easy. You only need to follow some steps. And if I am too fast, you can go back and review this video anytime you want. So guys, thank you so much. Please subscribe our channel. You will be the first one to know when a new video arrives. Like our Facebook page, Accounting Hub by Dr. Scarping. Like this video. And if you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a nice day and God bless you.